All right, good morning, guys. How are you guys doing? I'm back again, just as I promised in our group page that I was going to host to talk about the two-line strategy and how you can begin to apply it to your trading. Okay, and that's what I want to do now. So you can see the screen, and on this screen, I'm working on gold presently. So uh, I'm trying to do a back test on gold for your sake. I want to do a back test on gold using the two-line strategy, and um, actually it is very very simple, and I'd like you guys to give it your rapt attention. I'd like you to give it your rapt attention. So there are some things I'll be talking about. I want to talk about majorly the two-line, what characterizes the two-line, what makes it up, what's um like, and how you can infuse it, how you can employ it in your trading. Then I will talk about the time frame where we use the two-line strategy. I will tell you how you can calculate your risk, how you can calculate your risk. That's okay. What lot size are you going to use for this trade? You know, and how you can conflate, how you can conform your risk, your lot size. Now you can conform it to how much you are risking of that trade. Then I'm also going to show you a template that you can use to use you can use for your two-line strategy. Now this template, it is not yet um, I'm not giving it out. I think you develop your own, but I will show you how I use mine, right? So I think we should start already. So the first thing I would like you guys to pay attention to, is these boxes here. You can see this blue, these like ocean color block boxes. I don't know the color they call this. This one. You can see these boxes. You can see this box. You can see this box. Okay. Now, also you can see this box, this rectangular box that is rectangular in nature. You can see that too. You can see these ones here, right? Then you can see these small boxes, this small rectangle. So each of these boxes, they show different things, the different sessions we have in the market, right? So just to remind you, I am working on the 15 minutes time frame. This is a 15 minutes time frame. Then I'm working on gold, right? And I'm taking my back testing. I'm doing my back testing from November 1 of last year, right? From November 1 of last year, that's where I'm taking my back testing from. Now, this on 15 minutes, you can see this dotted line here and here. So this marks the beginning and the end of the day. This is the beginning of this month, of this day. This November 1. This is the beginning. That's so that's 12 o'clock candle, 12 a.m., 12 midnight to that's 12 midnight of the next day, right? And also I have to put it out here that I'm using OctaFX. So I'm using the OctaFX real account, the OctaFX real account broker to analyze this, right? So the reason we use OctaFX at ProCycle is because more or less it's like it shows the clearest form of the market conditions. Most of these prop firms that I've seen, they don't do that. OctaFX aligns with the GMT, the GMT time zone. That's the Greenwich median, the Greenwich meridian time. So OctaFX aligns very much with that. And also, what that means is that when it is 12 a.m. in London, London is GMT. London uses the pure GMT time. Okay, so when it is 12 a.m. in London, that's when the market opens on OctaFX also. So that's why we use OctaFX to do this. But in most of these prop firms, you will see that okay, the broker, in fact, different brokers are different. Like their charts are usually different, and you notice that mostly on the higher time frame, right? But OctaFX is just the preferred stuff now. It's what we prefer to use, and to me, I think it's safer to use than most of these other ones, right? So yeah, so like I said, the first box you can see, this almost square box, is that's your Asian session, and it starts by 12 a.m. by 12 a.m. and it closes by 8 a.m. on the GMT. So if you're in Nigeria, know that okay, your calculation is GMT plus 1. So that's my mean. The close of this candle will be something around 7 a.m., something like that, right? So I would like you guys, there's a way to install this template on your OctaFX. I will try to get it. Let me see if okay. I think I will look for that in another video. But the easy way you can do it is that okay, if you have an OctaFX account and you don't have this box, just look for okay, your grid lines that show when the day starts, right? You separate it, the day breakers. That's what you're going to choose. So you go onto your chart and insert the day breakers, right? And then you look for okay, what is the eye? So what this box marks really is not, yes, it captures the entire Asian box, but the thing we are looking for is that okay, we are looking for what is the high of this candle, like what's the high of this Asian range. So the high of this Asian range, you can see that's the limit here. The high of this one on my data window, it shows that it is 1986.10. 1986.10. You see that just at the left corner, this area, right? At this area, you can see my mouse cursor. So this is the high of that Asian range, which is 1986.10, and the low of that Asian range is what? 1975.17. That is the low of the Asian range, right? And that's where our analysis is going to stem from. So this box signifies our Asian range, our Asian box, right? And then this next one, this is the London session. London session, according to OctaFX, it starts by 10 a.m. It starts by 10 a.m., right? And so this is just the beginning of the London session. It starts by 10 a.m. and the close here is 11 a.m. here in this box, but I think it goes further than that. Then the New York session starts according to this time, and according to, you must remember that okay, we are working with this, what they call the solstice and equinoxes. They used to do this, especially London and the UK and the US. They do these daylight saving mode, right? So this time is bound to change. There are times that it is 11 a.m. our time that the market opens, but this time it's 12, right? So 11 a.m. our time, and also okay. So now this is the New York session. I can see it opens here at that's 4 p.m. the 4 p.m. and then it ranges on until it goes as 20 as that's 8. That's 8 p.m. That's 8 p.m. That's when it closes, right? Okay. So we are not concerned with the London session or the New York session. We are most concerned with the Asian session. So the high of the Asian session and low of the Asian session. What you just need to do is, if you don't have this template, even if you have the template, just mark the high. You place your line on that line. So if you don't know how to pick your line, so you just pick your horizontal line. You can see where my cursor is. You pick your horizontal line here, right? You place it on this Asian box. You place it on the high. Then you duplicate it. You can go on and pick it again. You can press your control and hold on the line and bring it to the low of this Asian session, right? Now remember that I told you that we're taking our analysis from November. We want to start with November 1, so I think we are going to have to start with. We have to start from October 31st because we want to analyze first from November 1. Okay, so I'm going to pick my line and draw my two line. Take your two line from the previous day. Now, because the way the two line works is that you don't take your Asian range, you don't use the Asian range on the previous day. No, you're not considering the present day. You are drawing your Asian range from yesterday, from the previous day. I'm sorry, I'm coming. Okay, sorry, I had to quickly answer the call there. Okay, all right. So we're analyzing from the previous day. So you mark your two lines. Your two line will be applied on the Asian box of the previous day, right? So I want to analyze I'm doing a back testing now. Please understand that I'm doing a back testing. So I'm taking my analysis from my back testing from the previous day first. So the Asian range of the previous day, the high and the low, I consider that. Then this is what I will be looking for. Where it hits my wherever the present day candlestick, wherever there is a rejection or a reversal on any of these lines, on any of either it is the Asian high of the previous day or the Asian low of the previous day, that's what I'm looking at. But also more than that, I'm also considering something. Right, I'm going to also consider something, and I want you guys to pay right attention. So you can see this this wavy line here, this wavy white line, right? So that is our indicator. This wavy white line is our indicator to know if we are to take a buy or a sell for that day. Okay, to know if what am I considering? What is the important thing that I'm looking out for on this day? Am I looking to buy? Am I looking to sell? So you use your this wavy line to do it, and this wavy line is nothing other than the moving average, the 200 EMA, the 200 moving average. Now the way to install your 200 EMA is to go to Insert, click on Indicators, you click on Trend, then you look for what? Moving average. Look for moving average. So on the time period, please, you have to, especially if you are new to two line strategy, you have to watch this again. You have to watch this video again. So on the period, you write 200. The shift is 0. The exponential, the MA method is exponential, and you apply to close. So the style is white, color white, right? And then you click OK, and that will be all. All right. So this movement shows the buyers of the market what is expected of the market at this period, at this time. That's what this is showing, right? What are you expecting to take for that day? Are you taking a buy? Are you waiting for a buy setup for this day, or are you waiting for a sell setup? So that's what you want to achieve with your moving average, with your 200 moving average, right? So I've done this up here. Excuse me. Okay, so I've done this up here. Then I've drawn my line. Now, if you see the way this 200 EMA moves, this 200 moving average, the way it moves. Now, since my Asian range for the current day is below this 200 EMA, what I'm looking for predominantly on this day is a sell. I want to say that again. If the 200 EMA box, of the current day is below this moving average, this 200 EMA, this box, this Asian box of the current day. I've taken my line. I'm taking my analysis from the previous day of Asian box, right? But now the current day Asian box, if it is below this 200, like it is fully submerged under this 200 EMA, what am I waiting for? I'm waiting for a sell. I am waiting for what? I'm waiting for a sell. So that's what I'll be looking for. I'll be looking for only sell opportunities on that day. And the way to know, okay, for a sell opportunity is that, okay, I must look for a period. I've drawn this line. I'm looking for that period when when the candlesticks forms a rejection pattern around this line. When the candlestick forms a rejection pattern around this line, that's when I'm going to take my sell, right? And this is what happened. You can see at the open of the New York session, that's exactly what happened. You can see that now. The first thing is that this candle, let me expand this. So I've widened this up just for you to see better. Okay, remember that we are still on November 1 of 2023. Now, the first time that this candle entered, you can see that it started buying. Then, when it entered there, it first formed a rejection, but I'm not taking it yet. I'm looking for at least two candles, at least one or two candles that closes below this line. Remember that we are looking for what? You are looking for a sell. Okay, you are looking for a sell. I believe everybody should be able to see this. Okay, let me confirm if people can see it clearly. Okay, I believe everybody can see that. Okay, so you are looking for a sell, right? So this 4 p.m. candle first enters here, then it forms another. Now it closes below this line, but I'm not taking my sell yet until I can confirm, because this thing, even though it shows a reversal, it closes below here. I need to find a bearish candle that closes below this line. That's the first thing I'm looking for. And also, you must remember that, okay, if this candle moves up, the fact that this candle closes, the next candle can actually still move up and go into this line. So I'm only looking for a rejection pattern on my previous day's Asian high or my previous day's Asian low, right? Because that will afford me the opportunity to know how to place my risk. So now the next candle, you can see this next candle, this 415 candle, it also closes below this line. Then the 430 candle also closes. It comes up, it forms a bullish candle, but it closes just above the line, right? Then now the next candle, the 445 candle, opens, and what does it do? It closes below this line. Now you will see that this reacts exactly with our EMA. It reacts exactly with our 200 EMA, our 200 moving average, right? So you can see this next candle closes below this line. Now this signifies a good rejection pattern, right? This is a good rejection pattern on this candle. This is a great rejection pattern. And if I want to enter my trade, I'm very, very safe. It will be very, very safe of me to enter my sell from here. Upon the close of this candle, now you have to wait for the close of your candle. Trading is about being patient. It's about taking your time before you execute a trade, right? So now I'm going to close this. I'm going to initiate my trade just after this candle closes. So it means as this candle opens, I'm placing my sell. Now, before I place my sell, I need to do some calculation. As this candle is preparing, as I see that, okay, this candle is coming down. I'm already preparing. Okay, where is my high? The high here is what? That's 1991.94, right? 1999.14. So I just do my little calculation. 1999.14. And where does this candle close? This candle closes at what? 1986. 1986.48. So this is where I'm just placing my cursor on this candle, and I'll come and check on this data window what it's saying. Okay, so you can always access your data window from somewhere around here. So you find your data window if you want to see it. Okay, so now I need to find a difference. What's the difference? And I guess I'm going to have to share another screen. I'm coming. Okay, so I'm sharing this the template I'm talking about, right? So you have to have this template. You can actually look at this video again and copy what I've just done here. So what I'm looking for is November 1. That's the date, November 1 of 2023. You might put here, you might not, depending on you. And the setup, remember that the setup I'm looking for is what? It's sell. Okay, I'm not yet doing the profit or the loss yet. But this is what I'll just quickly do. You know, we are trying to calculate our sell. Where are we putting our sell? Remember that the high we had here, remember that our high was 1991.94, right? And the candle closes at what? 1986, thereabout. So 1991 plus 1986 is what? 1991 plus 1986, that's what? That's the difference of 5. Okay? So that's the difference of 5. That's like 5.9. So you can say, let's just say 6 points. So that's what, and you know, on gold, it is 60 pips. And that's 60 pips. Right? I didn't know you that actually. Okay, so on gold, we are looking at 60 pips. So from your entry, so if you want to initiate a sell from here, so if I'm placing a sell here, then it means that my stop loss is going to be just a little bit above this line. It can be a little bit above this line. This is what I usually do. I just look for, okay, where is the liquidity in this market? So this is the liquidity, right? And you can see this is confirming. I mean, this part, this rejection comes at this point, right? It comes at this point in the market, right? So I'm just going to put my line just a little bit above, let's say at 1992. So I'll be looking to, my stop loss will be something as 1992.0 or 0.00, right? And that will be, so from here to my point of entry, which this shows like 58 pips. Let's just round it up to 60 pips because you may not get the market execution immediately, right? You may not get it perfectly. So let's just say 60 pips, right? So 60 pips. We are working with 60 pips. So now your 60 pips difference, how does that correlate with, how can you apply that to your 0.5% risk that we talked about during the bootcamp? Your 0.5% risk. If you have not seen the bootcamp training, please, I would advise you to see it. You can check through the live videos and you see the 3-day bootcamp. Go through each of those training and you get a lot from it. So you'll be able to relate very well with what I'm saying, right? All right. So you can see now I placed my sell here, number one, because this candle is long enough that it swallows up 2 candles. Swallows up 2 candles. So this is a very, very good rejection pattern. So I'm taking my sell from here, from 1986.50, right? And I'm putting my stop loss at what? 1991 or 1992. Just above, a little bit above the eye of this rejection candle, right? So it gives me roughly 60 pips, right? And I need to do my mathematics right. Now, 60 pips, how do I use that to 0.5? How do I convert that to 0.5% of my account? So let's say, for example, that your account is $100 account. Okay, let me present. I want to share another screen. I want to go back to that template I was using. Okay. Okay. All right. Okay. So remember that my stop loss now, SLEA means stop loss. So my stop loss here is what? 60 pips. So SL is also calculated in pips. I'm using pips to calculate it. Okay, so my stop loss is 60 pips, right? But then I'm targeting at least a risk reward ratio of 1.1 to 2. 1 to 2 risk reward. That's the meaning of RR, risk reward of 1 to 2 at least. It could be more. So I'm targeting, so if I'm risking 60 pips, I'm expecting to get 120 pips out of this trade. Right? I'm trying to get 120 pips out of this trade. How do I make that happen? 60 pips. Okay, so now if your capital, let's say your capital is let's say it's $10,000, and your risk percentage is 0.5%, right? Now, what is 0.5 of 10,000? Let's go do a quick mathematics. 0.5 times 10,000 divided by 100. So 50. It means what? I'm risking $50. I'm risking $50 for this account. For this trade, rather. I'm risking $50. Right? So now $50, remember that your stop loss value is what? 60. But your risk is in dollar is $50. Right? Okay, and do that. Okay, so I mean, this is $50, and I'm risking my stop loss is 60 pips. So what do? I just do 50. That's in dollars. 50 divided by 60. I forgot to put my equation. Okay, so that's 0.833. So that means that if I use 0.8 lot size, the lot size I will be using for this trade is what? The lot size I'll be using to execute this trade. I'm trying to remember. Is this 60 pips divided by 50 or 50 divided by 60? Okay, whichever one. Sorry. I want to get the facts right. I want to check if it is 50 divided by 60 or 60 divided by 50. Okay. I think it's going to be 50 divided by 60. I think I'm correct. 0.8. So I'll be risking my lot size for this trade is definitely going to be what? It's going to be 0.83. That's what I'm using. The lot size I'm using for this trade is 0.83. So that's the lot size I'm using. And the profit target I have, remember, we're using 1:2. Now, I can't determine the profit yet until I see what's going on. Okay? I want to confirm that, okay, this thing goes well. Remember that we are back testing, right? And I entered my trade here. Oh, sorry. I have to share my screen back. I need to share my screen again. And okay, So I'm back, and I entered my trade here, right? On this opening of this candle, that's 5 p.m. candle. Then I'm going to look for what? 120 pips. How do I get 120 pips? So how to get 120 pips is that was 1986 minus 12. So that will give me 1974. So I'm looking for where I'm going to get 1974, and that's going to be somewhere here. So this particular candle is where I will get my result of 1:2 that I was looking for. Also, you have to also consider that, okay, number one, you have to consider what is the market, how is the market been behaving, right? But ideally, you are looking for 1:2. Now, trust me, 1:2 may not come every time. Sometimes it will give you 1:1.5, sometimes it will be 1:3, sometimes it will be 1:5. I'm sorry if you are hearing some background noise. Okay, I'm trying to sit that out. Okay, so that's 1:2, right? So my targets, remember that 1986 minus 12, that will give you 1974. So I'm just going to put my stop loss, my take profit now. It will be somewhere around there, right? It will be somewhere around there, right? And in fact, that was what happened. So if you are targeting 1:2, this candle will have given you your 1:2. This particular candle of this 630 candle will have given you 1:2, give you 120 pips, right? Because the low here is 1974. The low of this candle is 1974.41. Look at your data window by the left. You can see it's 1974.41, right? So to your opening price of this, so I think that's a good one if you ask me, right? So that's how you analyze your trade. That's how you take trades using the 2-line strategy, right? And remember that if the market goes against you, if it's not decides to now return and hit your stop loss, right? You just have lost $50. But with what you have done, with the way this market went through, you'll have gained what? $100. You'll have made your $100 chop. Okay, so I believe that is quite understandable, right? So if you want to do the next one now, because this video is getting long, it's already 32 minutes. Okay, so again, if you want to do for the next day, you bring your line down. Now trust me that with this setup, you will not see with this strategy, you will not see setup every day. It's not possible that you are going to see your setup every day, right? So I mean, you will not see setup every day on this spear every day. It's impossible. So I'd like you guys to do a lot of back testing. So now I've done for November 1. Okay, I think I should enter into my journal what I just did. And quickly, let me go back to my journal. Okay, so my profit here is what? In pips is 120 pips. I don't have any loss, so that's going to be nil. So remember my stop loss. If I had a loss, my loss would be the value of my stop loss, right? So I don't have any loss if I'm taking this trade. Remember that this is back testing, right? And the number of entries, I only entered this trade once. And then the duration of the trade ran from 5 p.m. to 6:30. So that's 1 hour 30 minutes. You can just put 90 minutes. So that's 90 minutes, right? So you can put 1 hour 30 minutes. And my risk reward was what? 1:2. Okay. So really, you can bring your risk reward here, or you don't have to. You don't have to really, because you are back testing. There are times that you don't even work with this certain risk reward. This is for your own practice target. But there are times that you just want to see, okay, how far. Sorry, I did not share that screen. Okay, I've shared it. Okay, so You want to see how far this thing went. So that's what you want to see in most cases. So I'll just quickly go through. Sorry, I'm using only one system. That's why you have to collapse and install new. Okay. So now I want to do for the second day. Now for the second day, you see that your 200 EMA is cut across. Now remember I've placed my tool line on the Asian box. I've placed it on the Asian high and Asian low of the previous day of November 1. I want to analyze for November 2 now. And you can see how this line cuts across. I don't know if everybody can see this. Sorry, I tend to use very faint lines. But if everybody can see it, I guess people can. Okay, so I'm working without faint line. Please pardon me. Okay, now my 200 EMA now cuts across my Asian box. It cuts across, it's cut it in two. Now, this cutting in two, it signifies one thing, two things to me. Number one, it shows that okay, the day tends to be wavy, or if there is setup, the setup will not be very pure, right? So I try to avoid trading this pair on a day like this. You can see your 200 EMA cuts across what? It cuts the middle of the Asian box, which is wrong, which is not safe to trade. It's not safe to trade, and you can see now you can evaluate by yourself. Now, if the day that the trade went, that the Asian box was below the line, you can see that okay, we had about something like 160 pips eventually. We're able to catch like 160 pips or 170 pips from this trade if someone had stayed, right? But this one, in this particular case, the maximum, the high year was that's 1990, and the low of this day was 1978. So that's about 120 pips difference, high to low for this day. So this is a very unsafe day to trade. It doesn't present very good setup, and even if it does, it might be chaotic. So I want to avoid trading on this particular day. The same thing that happened here. Now you can see that on this one, okay, now this one gives us a good kind of stuff, but this is definitely the effect of a news. It's only a news that could have done this. Sometimes it's not news anyway, but only a news could have done this. If you look at this day, November 3, it must have been a very high impact news on that day. Okay. So I'm not taking my trade on November 2 because no suitable setup was presented for me. On November 3, the same thing, right? Because this line, this Asian wavy line, I'm sorry, your 200 EMA, it cuts across, it cuts into the middle of your Asian range. So this is very unsafe to trade at this time, right? So please don't take those kind of trades, no matter what you say. If you're Asian, whenever you see that, okay, you open your charts and the current day Asian range, you see that the line cuts into the middle. Don't take that trade. I repeat, do not take that trade. Okay, so this is another analysis. Now this is now I want to go for November 4. So I post my Asian range on November 3. That's I'm going to do my 2 line on November 3. Right. And I'm targeting November 4. Now November 4, look at what happened. This is the Asian high and Asian low, but the 200 EMA, it's almost cut into the middle. In fact, you can see that it's cut into the middle of this. It's cut into the middle, right? But the way it shows, to some people it might be that okay, it's more to the downside There is more pips to the downside than more to the upside. Okay, so let's measure that from this point to this point. That's 64 or 64, and from here to here is what 48. If you can stay out of this trade, or if you want to risk it, you have to risk very responsibly. You have to be very, very, very careful, right? You have to be very, very careful when you take this trade. So this shows more to the downside. So a person like me, I might risk it and say, okay, I'm looking for a sell. I'm looking for a sell, and I'm looking for a sell in this market. But where do I enter? Now, if there is no favorite, there are a lot of points of entry. I think I will have to take in this. I have to take in that line. Okay, so to make it a bit bold. Right. Okay, just so that people will be able to see where. Now, if I'm initiating a trade at this point, personally, I see that it might be quite dangerous to initiate trades during your London session. So I tend to wait. When I see this kind of stuff, I will want to wait till the New York session before I initiate my trade. All right, or when we're getting close to the New York session. So now look at this. There was this spike. Now, if you had entered during the London session, you might have entered sell here. Some like after the close of this candle, there was a rejection. Show this. So you can see that there was a rejection. It hit the line, came back. There was a rejection. You might enter sell here, or look at what happened. It's kept going up, right? And if you put your stop loss here, it will have taken you out, right? So if you have days like this that the EMA cuts across, but it's kind of divided into two, but okay, there is more advantage to the sell side than the upside. You might want to wait till your New York session. Now look at what happened here just before the New York session starts. You have this cross, you have this rejection candle. Now it will be safe for you after the close of this candle to enter for a sell and put your stop loss here. If you enter for a sell here, just upon the close of this candle and the start of this candle, the open of this candle is 1986 also, and the high is 1989. So you can put your stop loss just above this to be 1990, and you enter your trade at 1986. It means you are risking something like 40 pips, right? 40 pips, and you enter your sell. You enter your sell here. Your stop loss is at 1990. That's 40 pips, right? So if you enter your trade here, okay, you now have to wait a little bit. Okay, since your stop loss is 1940, and let's say you are risking 40 pips, and your RR is something like that's 1:2. 1:2. So that means you'll be targeting what? 1:2, which means you'll be targeting 80 pips. 80 pips. Okay. And remember, I told you that there are times that it will not play out exactly how you want it. Okay. So you have to know how to manage your risk. Sometimes if you have 1:1 to the upside or 1:1.5, please take advantage of it. So you can see here, to this place, that's 40 to 63 pips. Let's say 64 pips. So that's 64 pips. That's 1:1.5. 1:1.5. They can decide to take your profit here, especially if you see this rejection, or you might wait it out. Right? You can see the market returned back to this place, and it came around here. I know some people, it is when they see something like this, and that's when they will take your profit. It happens to every one of us, right? So sometimes you have to be conservative in the market. That's the truth. So if you decide to wait it out and it came back, eventually you would get your what? Eventually you get your 80 pips. And This is a candle that will have given you 80 pips. This candle exactly 80 pips. You have gotten your 80 pips here. Okay. So look at this. So now it happened at 10:30 after FX time. That's like 11:30 our time. Or 30, I can't remember. That's like 10:30. And you open your trade when? You open your trade here at 4 o'clock, 4 o'clock p.m. So that's a difference of 4 hours 30 minutes. So you take 4 hours 30 minutes to get your 1:2 eventually. So so that's just the technicalities behind the 2-line strategy. I will try my best to also do some more videos on this to explain anything. So if you have any question, I'm going to drop a link. I'm going to drop a link on this in the description. I'm going to drop a link in the description so that you can ask me anything. You can ask me questions. You can drop your questions, and I can attend to them. You can ask your questions also in the chat box. But I think it will be okay for you to ask your questions primarily using that NGL link I'm going to be sending to you. So please give me a minute. I'm trying to get the NGL link. You can ask your questions and we address it. Okay. So yeah, you guys, you're going to see the link at the description. In the description of this video. Please do well to send your questions. If there's anything you don't understand, you can let me know. I'm going to find a way to solve it. So thank you very much for your time, and you should have a wonderful, wonderful day. Bye for now.